2021. We can no longer forecast what's going to happen in 2021. We're already deep in it. And let's kick off this morning with Vandana Hari, founder and CEO of Vanda Insights. Very much enjoyed reviewing the Vanda Insights today, which are posted in the Daily Digest. And ultimately, Vandana, the crude oil markets are, as you describe it in your letter, suspended in limbo, waiting for sort of the white smoke, as they might say in the Vatican, of the Iran talks in Vienna.
Yeah, the white smoke from Vienna, yes. Indeed, I think Iran is a key factor. Obviously, the oil complex is keeping an eye on it. But if you look at fundamentals and financials, they haven't given much reason for crude to move decisively in either direction and break out of a band either. So when I talk about financials, I think the narrative from last week of investors just losing their risk appetite and all heading for the exit, the inflation fears and all of that we have been discussing, you've been discussing on your show. I think those very much filtered through to this week. And I suspect they'll stay with us. And that's something that's very hard for the oil market participants to get a read on. You never know. You wake up in the morning in the US, and whether investors are going to have that appetite or not, it's anybody's guess. I think that's a problem for oil. The other is in terms of fundamentals. I think it's more of a limbo. I think it's a little bit of an equilibrium. I feel now, nothing much has changed substantially over the past fortnight in terms of optimism over US demand rebound, cautious optimism over Europe reopening, and then you have India and a flare-up of COVID in certain parts of Southeast Asia. So nothing has changed on fundamentals, financials, it's unpredictable, and then you have Iran. I think Iran probably is right now the biggest unpredictability. The oil market has, I think the received wisdom is that the big bang deal is not going to happen this week. At least, that's my base case. But you never know. If they pull a rabbit out of the hat, I think traders will need to be poised with their finger on the sell button. I think we'll probably see a sell-off if we see some kind of a deal. Though a comprehensive deal and a full removal of sanctions is not my base case.
Let's go to Bora Barryman, Managing Partner, Hormuz Straits Partnership, sitting in London. Bora, once again, we're only a few days away from OPEC meeting, its next monthly meeting, the 1st of June. And there's noise in the markets about, the OPEC compliance, the laggards, if you like, all of those countries that have been cheating on their commitments to cut over the last 12 months. And there's still some expectation that they will meet those violations. Do you think the market even cares whether the OPEC plus countries that haven't performed deliver on those barrels?
I think the market is being managed effectively by the, let's say, official pronouncements of the OPEC plus group. And as long as they keep a sort of brave face of unity and at least the attempt to implement a strategy, I believe that there will not be sort of movements really outside of the realm of the overall risk appetite of the markets. But that being said, that's a big question mark, right? So we see these flows into commodities when markets feel bullish and they see inflation expectations looming on the horizon, and oil goes racing up along with the other industrial commodities. And when there's talk of increasingly, let's say, tighter Fed policy, which I don't think is really credible, but when you hear talk of that, and when Janet Yellen says certain things about steps to control inflation will be implemented if required, then you see a little bit of a rollback in markets, and oil is affected in that overall, let's say, ebb and flow of risk capital into the markets. So all in all, if OPEC surprises us and opens the spigots, and if there is this agreement between Iran and Biden to allow Iran to access the global economy, certainly the equilibrium could change.
Let's bring in Dr. Charles Elinas, CEO of Cyprus Natural Hydrocarbon Company. Dr. Charles, welcome to the table. I think it's the first time we've had you on the Daily Show, although we've really enjoyed your feature interview last month. I wanted to ask you, one of the big concerns for OPEC and for others looking to manage this market is the expectation for higher cost producers to return at prices near $70 a barrel. I'm wondering the situation in the East Med, of course, which you know well, although a lot of that is gas, but nonetheless, the appetite for majors and others to deploy huge amounts of capex. Is it there? What's your outlook for that at these prices?
Well, as you know, the majors are at the moment are in a stage, in a stage of siege. The report by the International Energy Agency last week for a roadmap to net zero, calling the majors to stop all new oil and gas projects, calling the banks to stop investment in oil and gas, is causing a bit of a havoc. And this week, for example, ExxonMobil is under attack by activists who are questioning the board. And
actually, I think today the board has to decide on new board members.
Exactly. So all of these things are putting the majors under pressure. And we saw what happened with BP. BP has taken initiatives towards clean energy, very drastic initiatives. And yet the activists are coming back and saying, oh, no, that's not enough. We need more. It's a never-ending story, and the majors are all under massive attack at the moment. And whether they actually plow money into capital into projects or not, I'm not absolutely sure. I think they will take a cautious approach for a while yet. It's a problem that will persist and maybe even heightened as we go further into this year with COP26 looming in November. All of this activism, all of this pressure for climate change is going to go into climax, and it won't make it easy.
Which, Vandana, the point there that as that gets heightened going towards COP26, that may indeed be supportive to oil prices, because ultimately, if capex isn't being deployed, the investment in new capacity, even though we have a lot of idle capacity at the moment, if we get this supposed surge in demand recovery in the second half of the year, at some point, the lack of capex could become bullish for the oil markets, Vandana.
That is indeed my fear. So first of all, obviously, the environmental pressures have become greater since COVID. But the price pressures, the low profitability, and the prospect of demand never returning, global demand never returning to pre-COVID levels, has accelerated a trend that had begun even before last year, which was just major starting to pull out. And of course, investment in greenfield oil and gas development projects is even, further out. It's almost become a dream now. That is my fear, that the transition has begun. It will continue. Hopefully, it will pick up pace towards, cleaner and more sustainable energy and fuel sources. But in the meantime, we do need oil and gas. And, if there's not enough being produced and demand rebounds, probably not, it's not happening this year. I think we're all agreed. Maybe we reached in 2022, we reached pre-COVID levels, but when it does come back, are we going to be faced with not just not enough capacity, but whatever spare capacity increasingly concentrated in the Middle East, which again, as we've been discussing, all around and on your show, is getting increasingly volatile. So I have very real fears around that.
Bora, the infamous inflation question continues to surface, and where the market gyrations are moving with that. We've seen in China some concerted declarations, at least, of their desire to dampen down commodity prices, curtailing credit access, and so on. Your thoughts on that strategy? Can it have success? And inflation in general, is it continuing, do you think?
Well, certainly the Chinese authorities will continue to attempt to manage their economy very closely, and we've seen those reins being held even more tightly in recent years by Xi
But
Jinping.
we saw today the yuan soar to a 3-year high against the dollar. I mean, if they were really serious about the inflation risk, they would, we would imagine, strengthen, to make efforts to strengthen the value of the yuan, or to weaken the value of the yuan rather, against the dollar.
I'm not sure about that because the commodities are priced in dollars, and a strong renminbi sort of mitigates that for Chinese consumers. The issue is the impact of that strong Chinese currency on Chinese exporters. Will they be as competitive in selling their products on the world market? But I'm a believer of free markets. The way I would interpret these dynamics is that China has shown a very strong growth performance in Q4, and they have shown people coming back to work. Internal demand is strong, and capital is coming into China, right? And the Chinese currency is gaining strength in relation to what? Well, it's gaining relation in relation to the dollar, and the dollar is clearly on a weakening trend. And why is it on a weakening trend? Because it appears to be the policy of the Fed, the Central Bank of the United States, to keep interest rates low relative to other major economies to bolster growth. And why do they have that strategy? Well, they say that they want to lift up people who have been left behind, but my view is it's because of the debt, right? The debt is so large, it's at levels that historically have only been seen in the aftermath of major wars. And when that is the case, slow growth is not an option. You need to grow the economy, and typically, for example, even after the Second World War, you had a long period of, modest period, 3 years of inflation between 1946 and 49 of 8 to 20%. We saw that after the Vietnam War, in the mid-teens was the rate of inflation. And this was all to erode the value of the debt that had been accumulated to finance these expenditures that were seen to be vital to national security. And of course, this whole period between the Iraq War and the global crisis of 2008-9 and COVID has hit the Western economies in the same way that has prompted them to accrue this large debt, and there's no way to sort of handle it.
So ultimately, the point you're making there is that regardless of the pressures that we're hearing in the markets at the moment, there's no way the Fed is going to react to these high inflation rates. Their strategy is more long-term, is much greater than the immediate gyrations of price impact at this front month, if you like.
Well, certainly their strategy is to finance the United States. And who sets the charter of the Fed, right? The charter of the Fed is encoded in United States law passed by the Congress, which doesn't look at the impact on the Chinese currency or any other global economy. It's not really designed as a global public good. It's designed to support, the economy of the United States, balance certain regional imbalances as well, and most lately, the the most significant function of the Fed is to finance the expenditures of the Treasury, because the taxes that the U.S. is collecting is not cutting it. And in fact, you could say most significantly, foreign investors in U.S. Treasuries are not cutting it either. You know, the interest from foreigners in U.S. Treasuries is really not there post-COVID. Hence, the Fed is buying the debt which finances all the infrastructure spending that Biden is promising.
Dr. Charles, I wanted to get your views on another story we have on the digest today, which sort of grabbed my attention, and that is that Sudan declares a state of emergency in the coastal Red Sea states of Sudan because of some tribal violence and uprisings there. That adds to the Yemen situation, which of course there's been a terrible tragedy for many years, but we also have instability in Ethiopia and Eritrea, sanctions last week by the American government. Why do I bring that to your seat? Because ultimately there's a lot of proxy tensions in the Horn of Africa, of which Turkey sits in the middle of, with sort of opposite to Egypt, to the Emirates, to Saudi. There's a lot of proxy activity in the Horn of Africa. And of course, in Cyprus, where you are looking to develop your energy resources, the Turks are also present, causing some obstruction to that development. So my question ultimately to all of this is, there's Turkey and Egypt are sitting down to talks at the moment, which could resolve a lot of these issues. And I'm wondering your thoughts on that, the Turkey-Egypt talks, the likelihood that they could resolve any of these issues in the East Med.
Well, they have sat and they have talked. They haven't agreed anything yet. They maintain discussions. They are still far apart. But I think also the actions of Turkey during the Israeli-Palestinian flare-up and
I know I'm still struggling myself with what's the right word to describe what happened in Palestine last week.
I call it flare-up.
Flare-up is a kind of diplomatic word, I'd say, but nonetheless, we'll use that this morning.
So as Turkey took a very strong stance against Israel, much stronger than expected. And given the close relationship between Egypt and Israel, I'm not so sure how the overtures of Turkey to Egypt will progress from here. I think it will take time. Egypt is not rushing into doing anything. And only last week, at a meeting of the defense ministers of Egypt, Greece, and Cyprus, they signed a pact of cooperation on the defense side, which I'm sure the Turks don't like very much. Turkey at the moment is in the throes of major internal problems. The economy is tanking, is in great trouble. The lira is continuously being devalued. The COVID-19 situation is still not under control, it's still quite dire, and Erdogan is under massive internal pressure. He's overreacting to a certain extent. He's creating a lot of these external factors to support his position internally within Turkey, but I'm not so sure that works anymore. So getting involved in the Horn of Africa and everywhere else, demonstrating to his followers in Turkey that he is making Turkey a major global power, it's not enough anymore. The problem is internal. The fact that there are queues in Istanbul of people waiting to be given free food. The fact that the food is costing now a bomb because of inflation. All of these things are not helping him at present. He's under pressure. But we've seen that before, and Erdogan seems to be quite adept in creating, like Netanyahu, escaping out of difficult situations and emerging quite strong. Whether he does it again or not, I'm not so sure, but it is a ripe situation for the US to, and we know that Blinken today is in Israel, trying to pacify the situation there and find ways to bring something out of this flare-up. Hopefully, that involvement that started by the United States in the region will help pacify some of these issues, help get a way forward with Turkey. After all, the United States doesn't want Turkey out of the Western system. If anything, it wants to make sure Turkey remains anchored to NATO, to Europe, and that
doesn't even drift further into the
China,
Russia camp, which is a risk at this
I'm not so sure it's the Russian camp anymore. The differences between Erdogan and Putin are increasing rapidly. It's more Turkey and China that is a threat. So I believe there is going to be some effort to resolve some of these issues. Whether they're resolvable or not, I don't know, but at least the effort will be made to find a way forward. But the victim of all of these things will be the SMED gas situation. That isn't going to go very far. With what we said before about the status of the international oil companies not spending under pressure, with the political situation, with the global markets, I don't see the SMED gas situation really returning to pre-COVID-19 plans. It's going to suffer.
Vandana, we saw again in your weekly Vanda Insights commentary on the inventories last night out of the US. While sizable decline in gasoline and distillate inventories, not modest, one would say, in crude. Your thoughts on the outlook for that? Not much of an impact on the markets this morning.
Yeah, in other situations where perhaps you wouldn't have such big issues as Iran and the turmoil in the financial markets, we typically see markets do react in Asia Wednesday morning to what the API says, and then sort of, they're prepared to see what the EIA is going to say and whether or not it's going to validate the API numbers. But this morning, and I don't know what it is, it's probably a bit of ennui, a bit of not knowing which direction to go in. It's Singapore public holiday today as well. But markets are just kind of unmoved by anything, which is why that led me to say that perhaps they're sort of like sitting on the edge of the seats to see which way the wind blows in the financial markets, and of course what happens in Iran. But
you did also have in your insights another note about the fact that Iran does have a lot of floating storage ready to move in case the bell is rung.
Yeah, just to finish very quickly on the US point, I think the market will remain very, very focused on the EIA data and especially demand. I think it's accepted now that US is rebounding, economy is rebounding, mobility is kind of way off the charts. But
air traffic is up to 1.9 million a day, which keeps growing every week.
You're sitting on precise figures. I'm impressed. But the market is sort of seeking continual validation, when it comes to the EIA data. Your other question was?
I've totally forgotten. Let's go to the survey question. That was a minute ago, Vandana. My God, that's like old history. The survey question today gives the room a chance to comment on this idea regarding the OPEC meeting coming next week, and whether indeed anybody really cares. Are we ringing up the survey question, Stephanie? Lisa? No? Maybe?
I saw it.
You did? Yeah. Oh, it's there. I don't see it on my screen. Oh, there it is. Finally came on my screen.
I saw it.
Right. So ultimately, 7 out of 10 OPEC plus compliance laggards have not yet submitted updated plans on how they will compensate for their overproduction in recent months. The question is, does anybody care? Does the oil market care about this ongoing idea that OPEC's come up with in the last year, that countries should compensate for what they didn't meet in the previous months?
I remembered your Iran question. Yes, they have about 69 million barrels of floating storage, as per a Bloomberg report quoting.
That's something we care about.
We do, because clearly that 69, that's a substantial, could be more. There could be on land inventories as well. And I presume this will be oil that will be kind of ready to flood into the market. But again, the question is, will we see a complete lifting of US sanctions? I have my doubts. That's the main tool that the US has to ensure that Iran lives up to its commitments, whatever commitments it makes. So, just complete lifting of oil sanctions will end all that leverage for the US. So,
Bora, one of the things that sort of creeps into our conversation regular enough, I suppose it does in every conversation, if you're having a cup of tea at home even, is Bitcoin, and the cryptocurrency seems to have really sort of parachute on everything this year. But the volatility we've seen there, risk off, do you think, what's your own thoughts? Is it any kind of barometer to risk on, risk off appetite?
It is a barometer to what
insanity.
Exactly. I think I forget which banker said this, but it's a barometer to irrational exuberance to a certain extent.
On steroids.
Especially of the sort of millennials and the Generation Z crowd. And I've really seen, people who have no, let's say, connection to financial markets getting really excited about this. You see these cryptocurrencies being advertised on the side of buses in London. But I believe that
my 18-year-old son, it's sort of up there with things to get excited about. It's sort of like when your shoe shine boy starts telling you to invest in something.
It's exactly like that. And crypto is not sort of a liquid, safe asset at this time, but clearly it's a speculative asset.
Does it tell us anything about the mood in the market? The fact that it went up to 60,000, dropped down to 30,000, now is back above 40,000. I mean, does it reference where we can think the appetite might be for commodities in general, do you think?
I'm not sure we could draw, lessons from that crypto excitement into even gold or iron ore, but but clearly there is some interplay between gold and crypto. Probably gold would have been much stronger had it not been for the crypto mania. But we see now
gold is now back.
It's holding its own. Exactly, gold is now holding its own. At the end of the day, I think the sort of crypto phenomenon, one, it's rooted in a search for alternatives. I think it's a symptom of a lack of confidence in the US dollar, because all this excitement is generally coming out of America, right? These American youth, why do they want to get out of their own currency to get into crypto, to get back into the dollar, which is the currency that they live their daily lives in? It's a symptom of an underlying sort of paranoia or something. And
well, there's a sense that logic is disappearing as 10 years into quantitative easing, and it does feel like the rules of the road are changed. Zero.
And it's driven by social media, which is a big part of the sort of new world order. It's a meme stock, so people follow the herd, the pronouncements of Elon Musk, or any type of news will really move by 20% or 30% the value of Bitcoin. But at the same time, there's serious talk that some type of electronic currency, crypto type currency, will gain the favor of major US institutions, the endowments of the universities, of the pension funds, and there are a number of factors behind that.
To me, I think it's sort of emblematic of a period that we've just come out of, which was basically all boats rising regardless of fundamentals. And I think the volatility we've seen in crypto and others is an indication that period is over. That's not saying it won't continue to rise, but ultimately all boats have stopped rising. Dr. Charles, are going to get the last word today after we get the survey question result, which may be appearing because for whatever reason my screen seems to be a little bit delayed.
I'll tell you the answer.
Yes.
74% no, 26% yes.
Okay, well, that's pretty definitive. Dr. Charles, just wrapping up on this major story that's breaking in Europe. I know you're sitting in the Netherlands today, I believe. The story out of Belarus, is that feel like a big deal sitting in Europe? This issue of the Belarus hijacking the Ryanair flight, is it going to escalate into anything more? What are your thoughts?
I'm not so sure it will escalate into anything more, but it is a big issue. It is a big deal, basically, because also the European Union is taking a strong view. The Greeks are not happy, and they are pushing hard for action to be taken. I think action will be taken. It's being taken anyway. Not will be taken. It's being taken. But I'm not so sure it will be magnified any further. I think it will stay where it is, more or less. It remains to be seen what happens as a result of all of these things, but I'm not so sure that Belarus is ready to respond to any pressure from outside, irrespective of what the pressure is.
It might be another thing to add to the long list of topics for Putin and Biden to discuss at their announced meeting in Geneva on June 16th, after, of course, they get beyond the question of why did you call me a killer? I don't know where they go with that, if that's the first or last question of such a meeting. But nonetheless, we have to wrap it up there. We do have a pretty interesting interview on today, an interview with the former Prime Minister of Lebanon, who we have a sort of a broad conversation across all of the geopolitical crevices in the Middle East at the moment, and he puts forward his views on them. So if you have half an hour, I think it's well worth a listen to some of the insights that he has to bring to that conversation. But let's leave it there, wrap it up. Dr. Charles, thank you very much for joining us this morning. Vandana, as always, thank you. And Bora, I really appreciate your time and getting up early in London. Have a great day, everyone. We'll catch up with you over the coming days. All the best.
Thank you. Bye.
Bye.